For that short technical hitch, we've already fixed it. That means that we do have Gabriel. Gabriel, I just want you to clear your sentiments on that because we have two issues that I would like us to quickly jump at this morning. You're talking about how this inflation number sometimes do not sort of factor in the assets, all right, changes in the country. And also, I want you to also talk to somebody who's looking at it right now, Gabriel, and then asking themselves the question, then why am I feeling the hit if the CBK and Ken BS is telling me, well, inflation is within line?
I mean, the two, as you rightly put it, there are two aspects here. There is inflation. If inflation is in line, what does that mean? It means, you know, prices are increasing in line with, you know, demand.
Yes.
There's demand that is driving inflation because there's demand side and then there's supply side. It actually means that there's still a lot of room, or rather there's still unmet demand. That's what inflation literally tells you, that prices are increasing because there's significant unmet demand. Is that the case? That's the question, because demand has taken a big hit. Purchasing power has been affected significantly. So that demand, I think, we've seen in some sectors. Food, for example, I mean, suppliers have to cover their costs, etc., because of curfews and restrictions. They're being charged higher by brokers. So you will see price increases there for that reason, but it might not be because the demand is there to sustain that price gain. Again, things like fuel, I think the increase, we've seen quite dramatic jumps since COVID hit. The decrease up to around May, August, and then another increase back to the previous rates, a big share of it based on because of taxes,
yes,
increases in prices. So that might be giving us different inflation numbers. But the demand side, or rather the pool of demand that is what is relied on when we're saying there is inflation, is not there. So we have other factors. For example, as I've mentioned, the food prices increasing because of disruptions, and fuel prices jumping because of that. But if you factor in all assets, then including real estate, fully the stock market, you then not have an inflation at that rate.
Pretty much, gentlemen, I would like us to move on to the next issue this morning just because of time. But the Kenya betting scene, we saw betting giants like Betting and SportPesa pack their bags from the local market, has been treated with a surprising news of a return to business of what used to be the biggest player by market share, SportPesa. Now, Milestone Games Limited acquired the rights to use the SportPesa brand name in Kenya, thus making the return of the betting giant. SportPesa exited the Kenyan market in September 2019 following revocation of its license by the Betting Licensing Board for failure to meet tax compliance policies. At the same time, SportPesa management lamented high taxes that weighed down on the stakes as the government imposed a 20% tax on all betting stakes. Now, the exit saw the firm send home more than 400 employees. Now, this new return begs the question of what is left of the local betting scene in what has been touted as a tough operating space after the government was seemingly seen to clamp on the betting companies in Kenya. Now, most companies halted their services back in 2019 in response to a new 20% tax on betting stakes in the country. Now, back then, SportPesa and Betting, two of the country's largest sports betting companies, being amongst the biggest to exit the market. Now, the new taxes were in addition to an existing tax on individual, I would say, bettors, winnings, or gamblers, and an annual business taxes levied on sports betting companies. Now, the new taxes came and amid sustained public criticism of the growing influence of sports betting companies, which had expanded into thriving multi-million-dollar businesses on the back of servicing local customers. Now, I will start with you, Peter Amunga, this morning. Yes, and I remember we had a conversation with you when SportPesa was exiting, but you had quite a controversial opinion. You said, let them stay, they are back. Are you happy?
I'm happy.
Why? Why?
Because Kenya is a country of gamblers. You know, let me say this. Even the way we run our economy, it looks more like and the way we do our gambling nation. So this is just us, you know. I tended to think that time that the minister and the person who was regulating was coming up with very heavy regulation systems on the betting companies, was doing this from a moral kind of point of view. You know, our children, our youth are getting lost.
But was it Peter? Wasn't it?
No, I tend to think we over moralize ourselves as Kenyans. You know, we tend to think that Christians, we church God. Kenyans, we are Kenyans. We are very unique. If mambo ingine ya kanisa nini, let us leave it away from the way we do our things. So Matiang'i brings in, you know, that, you know, our youths are getting destroyed. He's not addressing things like our youth also getting destroyed about with drugs. Drugs is a menace than even gambling. And a bad economy is even a thing. Moral games, the way Matiang'i wants us to play, when you have built a good, strong economy. But this economy where people are trying to survive, people are trying to make it, people are hustling, called hustling nowadays in this country. People are trying just to be there to survive. If an avenue like this one that SportPesa offers can come to help some people to survive, so be it. Really,
yes.
Really went even in a depression when we heard that SportPesa had gone away. Because SportPesa, apart from just providing a gambling platform or betting platform, has been very important in advertising. In even on my blogs, on my social media blogs, SportPesa was coming into those blogs and offering me some things in many ways to meet our obligations. SportPesa is not just about build company. To me, this is a great thing. Kudos. SportPesa, welcome back. Thank you.
I would just pick the sentiments of Gabriel this morning. And Gabriel, I just want to ask you this question just as we run away from it this morning, because Amunga thinks it's a good thing they're back and we should stop over-moralizing ourselves. Now, we do know in Eastern Central Africa, actually in major parts of the world, you'll find that betting in Kenya, we are the #1 when it comes to over-regulating that sector. That industry, sorry, we are the leading actually. Yes, so what is left of the betting industry in Kenya? And why are they back? Somebody would ask that question.
Well, I think I first encourage my colleague to, he should have started with the fact that he got some money from them. So that's where his energy is coming from. But yeah, on betting, I'll agree with him and disagree with him on some items. One, I agree with him that should not be, government policy cannot be based on morals. You cannot go and make policy based on, because I mean, for example, different religions ascribe to different things. Different people practice different things. So, you know, morals cannot be the very central pillar that you make decisions on. Otherwise, we would ban even alcohol and everything else that you want to consider quote unquote moral, which is not. Secondly, on the taxes, I think this is a trend that comes along with quite a number of governments where they tax what we call products with inelastic demand. Because betting previously has not been analyzed by economists properly. But if you look at it as is, it's proven to actually have quite inelastic demand. In that, whether people have money or not, they tend to still have that 20 shillings, 100 shillings to put that bet, to place that bet.
Yes.
So that's really what the government is following. So, I mean, honestly, the government is doing what I would do if I was in their position, tax the businesses. But what they're not doing is encouraging it, or rather giving them the space to actually perform. So SportPesa coming back is a win for the Kenyan citizenry, because we are now free to partake of whatever economic activity people want to take, and it's an opportunity, like my friend said, for some people to make 200 million. I mean, you can imagine. I mean, you know, even if the chances are 1 in 1,000, it's quite something. For some people, and the marketing businesses that have been hit quite significantly are going to benefit from this. So let the government take their taxes and let these people continue with their business. because there are other sectors that are not going to be marketing. It's good that we can have betting. Safaricom has taken a hit. They will get revenue from this line. So I think betting might fill up some gaps that have been there because, fortunately, and as I've put it,
yes,
betting.
yes, Mr. Munga, if you can get me as well this morning, I want to jump in on that as well. So is it possible, and I want to ask you this, and remember I asked you this question again as they were exiting. 1 minute if you may, because I want you to clear for us this conversation this morning. Morals are a big thing. Is that what the government is into? Morals and culture. Would you say that, well, our business culture, we do have other areas where betting is totally an offense? Is it possible for us to actually talk about that in the country?
Gambling. I don't me.
Yes,
Okay.
we seem to have the same technical difficulties.
Okay. So when you talk about gambling and morals, there are two things, or rather, let me put it simply as you put it. You just want for 1 minute response.
Yes.
There are very many things personally. I mean, personally, just because I do not consume alcohol, do I call the behavior of one drunkard immoral and then classify all drunkards as immoral? Just because I don't use Fuliza or excess debt, and these people take debt. Does not mean necessarily that the acts of one person reflect the industry. So we need to differentiate that very clearly. The behavior of one person could be moral, but you cannot put that as the behavior of the entire group. And we have worse behaviors that are approved. Corruption is a worse behavior, and we tolerate it more than we do gambling. Excess debt, there should be limits, but people take on excess debt. That is also very immoral. The society relies on you, but you're loading yourself up with debt. I've not seen anyone saying people should not take loans to a certain extent. So, you know, all these things, when you're looking at a society, you cannot manage to be subjective. You're not allowed to be subjective, to put your own personal aspects into making full-on regulations for everyone.
Yes.
So I believe gambling is an opportunity that sees many people fail, with very few succeed, and anybody will do anything to be the person who succeeds. Let them make their own decision. We are adults. Do not try and tell adults what to do with their hard-earned money after you've taxed it. Leave it to them. Simple as that.
Pretty much.
Very good.
Yes. Mr. Munga, I would like to bid you goodbye at this point because I would like to just take a little bit of a minute with Gabriel this morning so we can talk about exactly what is happening in the banking industry this morning. If you may, Mr. Munga, thank you very much for taking your time to talk to us this morning. Quite invaluable, as you always are, sir.
Thank you.
All right. Now let's jump over to the last issue that we have for you this morning. Well, local investors have snapped up 4.47 billion KCB Group shares, which represents an additional 3.9% stake in the 6 months to September, coinciding with a period when the market experienced international investor flight in the wake of the COVID-19 pandemic disruptions. Now, latest KCB shareholder profile for September indicates local investors took up 124.899 million shares in the lender, which saw their stake rise to a high of 2.089 billion shares, or 65%, compared with the 1.964 billion shares, or 61% of the total shares that were in the hands of locals at the end of March. In terms of profile, 40 new institutional investors and 1,416 new individual shareholders went for KCB shares during this period. Fine, we do have that. And if you look at the selected performance for KCB, which is also going to give us a talking point for this morning, you'll actually say that what they are talking about is the reduced net income in their half-year results all the way to June because of the effects of the coronavirus pandemic. But seemingly, Gabriel, that didn't stop local investors from galloping KCB shares. Why? And when you look at that balance as well, Is it good to have foreign investors, which is now at a whole-time low of 15%, or have more local investors in your profile?
Okay, thank you for the question. I think I'll take it as in three different angles.
Yes.
So one angle will be based on the actual company's performance in the banking sector. Two will be what are local investors doing with their money, and third will be, where are the foreign investors. So one, on the business, I mean, I think investors appreciated the fact that KCB decided to take a hit on its profits by providing for most of these loans that may go bad, may become bad loans. What several tier 2 banks did not do, they actually did not make enough provisions.
Yes.
So it was very bold of KCB, Equity, I'd like to quote Coop Bank as well, that made very huge provisions, taking a hit on their profits, because they accepted that we are not in the same business space. Some of these businesses, these loans might go bad. So they took the opportunity now to actually make provisions for all those loans. So it means going forward, and maybe from next year, they are starting with a clean sheet. They have only been left with whatever is healthy that is in their books. So people are already
Yes, we seem to have lost Gabriel at that point. Gabriel, can you get me? If you can get me, just confirm. Fantastic.
Yeah, okay.
Yes.
So as I was saying, so KCB has already made the necessary provisions. So what that means is that going forward, their books are actually only going to get better.
Yes.
Now, number two, on the market trend, if you look at KCB, if you look at their 12-year price, the highest they have hit has actually been around 55, the lowest been around 32. So when local investors saw KCB at 32, it was a very attractive opportunity, and people had no other place. There was no other attractive counter at the time. I do remember at the time. The only other ones were the likes of Scanad, which were already taken up. So there were very few opportunities at that point in time other than the two key banks, Equity and KCB. So local investors really bought a lot, pushing the price up to 36. What we need to appreciate is that for this price to go to where local investors want it, which is at around 55, because I can assure you people have already mastered the trading cycle of KCB.
Yes.
It comes down to 30, 33 because of either regulation or bad environment, as we've seen with COVID.
Yes.
And then after things recover, it goes up to around 55 to 60. And then it's been repeating like that since 2016.
Yes.
So people have already mastered that cycle. So people are actually now waiting for the thing or one thing that will push them all the way to 55. So that's why a lot of local investors have taken up shares in KCB. And the same is going to happen to, likely to happen to Equity Bank, because again, remember, we have very few options to invest in the NSE. We've seen quite a number of companies delist with COVID. If companies are not taking a hit on the profits early on, it means later on they will take the hit. So people are pricing KCB in the fact that they've taken the hit early on, which is very good for them.
Yes.
Two, again, limited investing options. Three, people have already mastered the cycle. And as the US elections end and foreign investors start coming back in, because remember, they're also facing a lot of problems in Europe and the US. So eventually, once they're done with the situation and they come back in, is when now local investors will take a reap, harvest their returns, and you'll see that the foreigners will now become, again, they'll take back that 4% that they've given up to local investors, because
Yes.
now people will make the gain and exit. So it's really a cycle that people have learned.
Yes. Gabriel, I want to ask you this morning, because then this also becomes a pertinent issue for us to talk about. If you're saying that 65 of your shareholding is actually taken up by local investors, would you rather, as a bank, you have international investors or just local investors majorly? What is safe in your profile?
It doesn't really matter. You see, the good thing about when you're listed in the stock market, you don't have to worry about your investor profile.
But Gabriel, yes, is it not the same thing that we normally do have a time when we're talking about international investors' flight from the country? I mean, local investors will stay because they pretty much do know that our biggest quarters will be KCB, the likes of Safaricom, the likes of Equity. But an international investor will just look at market forces and just move out, especially this time when we're approaching the electioneering period as well.
Okay, good. I think I see the angle you're asking. So Two things here. One is efficiency, pricing efficiency.
Yes.
What gives you better information?
Yes.
You see, when you have foreign investors, as some of your investors, there's an efficiency that comes in determining that price.
Yes.
They actually undertake more complex valuation. They consider currency, they consider fundamentals, they consider more issues when they're valuing that stock.
Yes.
So it actually is also an information point for local investors. So if a company has more foreign investors, you will see local investors are very keen to get in that as well. It's a signal. So it's also considered a signal. So yes, when they flee, it's a signal that things are not good in Kenya. So local investors who might not have been keen takes note of that and takes action based on that.
Yes.
Now, if the global economy is improving and investors are going to invest in another market other than Kenya, we get that information. So, okay, Europe is looking better now. So even we local investors can attempt to go there. But for local investors to be invested in this company, as you're saying, there's no risk really. Whether as you've seen, if foreign investors flee, as long as there's a legitimate opportunity, an investor from anywhere in this world, whether it's a Kenyan, who actually it's only that it's for Kenyans, it's easier for us to buy KCB shares because we don't have to change currency. We understand the stock market. KCB is a brand we know. So
Yes.
it's just easier for us to buy. So as long as there's an opportunity in a legitimate business, local or foreign investors will go there. And having either is going to just give us, what we need to pursue is efficiency in the pricing, because it gives a lot of information who you have as your investors. Because for KCB, it doesn't really matter. I mean, we'll see you all at the AGM, you all have 0.0%, so it's fine, no major influence, that's it. So the pricing efficiency of having foreign investors is key. So having a small percentage or a significant minority as foreign investors gives you a lot of efficiency in terms of information.
Pretty much. Gabriel, thank you very much for taking time off your busy schedule to speak to us this morning, sir.
Thank you very much.
Pretty much. And that's exactly how we come to the end of the show. Get involved. 2146 as your SMS line at Metropole TVKE across all your social media platforms. I am a Charles Araskokiange. Let's get talking.